How you going? Trent here. Thought I'd just give a bit of a breakdown this week in regards to what was announced last week by the federal government, being the small business incentives, and in particular around the small business asset write-off. This has been one that a lot of people have seen could be a benefit, but not really have a solid understanding on how it actually works. And I've had a few conversations with people over the weekend saying that it's all well and good, but how does it benefit them? Really what you've got to understand is that at the moment the small business asset write-off is $30,000, which means that if you buy an asset, or if you buy a piece of equipment or a car or anything like that in the business up to the value of $30,000 in your business at the moment, that can be written off in the first year. So let's just say that you've got a net profit that you're taxed on at $100,000. That year you'll be taxed on $70,000. So it actually has a benefit of reducing your taxable income and reducing the amount of tax that you'll pay or get back in your return. So increasing that to $150,000 actually says that if businesses are at a point now where they could spend money on assets that could help drive more income, it might be time to update a piece of plant or equipment, might be time to update some vehicles, office fit out, those type of things that a small business can purchase up to the value now of $150,000, you're basically going to be able to write that off in the first year. So same scenario, if you had a business with a net profit of $100,000 that they're taxed on, if they were to use the full $150,000 allotment, they could reduce their taxable income actually to a loss of $50,000. Now it's not an actual cash loss, there's been no additional profit spent in doing that. However, they'll be able to claim all that money that they've paid on tax so far this year back. So you can see there is a big benefit for businesses to consider this, and small business people to consider this. If they're looking at doing any of the things like purchase new assets, upgrade premises, upgrade vehicles, now might be a really good window to do it, because you can offset your tax this year and potentially in years to come, and hopefully get a bit of cash back into the business once you lodge those tax returns at the end of the financial year. If you've got any questions around this, your accountant's the best person to speak to in terms of the tax implications, but in how you can fund potential asset purchases and spread that cost out over several years, that might be something that we can assist you with. And feel free to get in contact with us through the Facebook page, on the website, or through any of your broker contacts. Thanks, and hope to speak soon.